Good morning, everybody. Thank you for visiting Cannin and checking out our chronicles and our technical analysis. This week we're going to jump right in, continue where we left off, and analyze Veritas Pharma, VRTHF on the OTC ticker. This is a Canadian company on the West Coast doing some virtual R&D. But they have some interesting drugs, including one that's about to start human clinical trials, phase 1 trials in humans, which will be dosing. And it will be for pain, acute pain, but they also have indications for chronic pain, sleep, a couple of other indications. So keep an eye on them. They have an interesting funding model for their R&D research, but that's not why we're here. Let's jump right over to the pricing chart so we can see what we're going to learn this week. And so again, you'll see Veritas Pharma, we're using our Heikin-Ashi, which is very easy to see downward trends and upward trends. And this week we have the AO, which is the awesome oscillator, which is kind of a fun one to use. The last couple weeks we've been learning about simple moving averages, and so we're going to extend that thought this week. The awesome oscillator is the difference between two different moving averages, simple moving averages. One is a longer period of 34 and one is a shorter period of 5. So you can see it oscillates as a histogram above and below 0. When it's above, the short is higher than the longer period, and vice versa when it's below 0. So let's just zoom out. What's the very first thing we look at with a pricing chart, and that's trend. And look at this trend, from 70 cents down to 9 cents. This is quite the obvious downward trend for this stock. And I want to show you a couple things using the awesome oscillator. The first thing to watch for, and I'll zoom in for this, is when it crosses 0. When it goes from negative to positive, that could be a buy signal. You can see had we bought it here, we would have gained a little bit. Similarly, when it goes below 0, that could be a sell signal. So let's see if we had an opportunity to gain some money here in the sell once it crossed over. That's a pretty rudimentary, a pretty basic strategy. There's another one that I want to show you, and I'm going to just go back until we get a good example. It's called the Twin Peaks. Cannin here is based in Colorado. We like our mountainscapes, so we're going to use those to our advantage this week. So here's a perfect example right now of Twin Peaks, where we have one peak followed by a second peak, which is smaller than the original peak. So this is a perfect setup, one peak, two peaks. As soon as we get this cross here, that would be our signal to get into that trade, to sell. And you can see what happened after that signal. A huge gain would have been realized had we taken that sell signal from the Twin Peaks. But the same thing can happen on the bottom if it's negative values. So let's see if we see any good examples of that. This stock hasn't been too much upward movement, but let's see if we see some Twin Peaks on the bottom. And here's kind of a close example, not quite, because the second peak is larger. And here's an example of the vice versa scenario. So we're negative now, we have our one large peak followed by our second peak. Had we gone positive right here, that would have been a signal to enter the trade as a buy. You can see that didn't happen. We have a lot of sideways movement there. So we had our Twin Peaks form, and then it never actualized. But watch both of those for the rudimentary cross from positive to negative. Look what happened here, big gains. But also watch for the Twin Peaks. It's a fun way to use the awesome oscillator, which builds on the simple moving averages that we've been learning about. And it helps us take advantage of any stock, in this case Veritas Pharma. So have fun with the awesome oscillator. Let us know what you'd like to learn next, and have a great week. Thank you very much.